Good morning, traders and investors. Are you guys ready for another pre-market prep? It is all about CPI today. What will happen? Will it come in hot? Will it come in light? Everything's going to be on the CPI. Of course, we got some other topics to touch, but investors, what will happen today? It's going to be definitely some fireworks at 8:30. We will be here to go ahead and bring you those numbers. We'll talk about Oracle, also Eastman Chemical, Acreal Therapeutics. We got Peloton talk, SEC kind of charging VMware, just kind of putting that out there as a red flag. GM Cruise Unit saying that they'll be having to launch driverless service in Phoenix and Austin this year. We'll take a look at, of course, the futures action, see what's going on. We got our guest, Raghee Horner, Managing Director of Futures and Simpler Trading. Welcome to Pre-Market Prep. Let's get it started. Rise and shine. It's time to start the day. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day. Good morning, traders. Rise and shine. Let's get it started. Joel Elconin, Dennis Dick, and let's take a look at the markets. It's CPI day.
CPI day, and we're starting. Yeah, we're starting.
Feels like my birthday or something.
It is. It is.
Yeah.
Starting out on the right foot today, hopefully for everyone, including Triple D there. We're up 27 and a quarter at 51.57 and a quarter. Spent very little time unchanged, and we're in no man's land, folks. I've been saying this for 2 days. There's the Powell Payne high. I'll even put a little arrow here. Boom, 42.34 and a quarter. Yeah, I'm crazy, but that's the next daily resistance level. You have the dollar down for the fourth day in a row, down 59.6 cents at 107.5. TLT up, but still hanging near the lows of the move. That's up 65 cents at 108.07. Crude, that's in the green by $1.21, trying to get back over 90. Gold up fractionally. Silver trying to get in that 20 handle, up just a couple pennies in 1988. And Bitcoin holding the Scaramucci FTX rally as we speak, up $1.60 at 22,615. Triple D, when after hours there, we texted a few times back and forth, but I was going to ask you if there were any offers out there in the market. Was it just old bids? Is that what you saw out there?
Pretty much. I mean, this has been this market. It has been non-stop bid for 5 days straight into this print. I mean, obviously, we called this perfectly that I thought they might try to get ahead of this, front run it, whatever you want to call it. They have. And it's gone even further than I thought it would ahead of this print. I mean, boom, take us back to 6 trading sessions ago. We were breaking down 390 support was in jeopardy, undercut in the Gil Morales rally. And you've just seen a nonstop bid since. There's FOMO back there. FOMO is here once again. So obviously, expectations for this CPI print have moved to it's gonna be light. Everybody and their grandma knows it's gonna be light. It's now a matter of how light. So beating by a tick is not going to be good enough, I don't think. I think it needs to beat, by beat, I mean being soft. If we come in line, or if we come in whatever exceeding, expectations, or call it hot, they're going to kill this market. I think that it's going to come in significantly light. I think you're going to get an initial pop. I think that's what I think is going to happen. Obviously, I have no crystal ball. Nobody knows anything for sure. But I think that's what's going to happen. It's going to come in significantly light. The algos are going to buy it right on the initial print like crazy. Maybe even take us up to I don't think we're going to touch 420, but you never know in this market. That's where the major resistance point is. And then look out for the rug pull, because if we just, history repeats itself. Last month, if I remember correctly, we ran up into the number as well. We actually did continue for 3 or 4 days before we started to leak, and then we had obviously the Powell rug pull. So I don't know if it's going to play out exactly the same, but it's kind of so far playing out very, very similarly.
Yeah, you've been calling for that 420. It blew through that other resistance that I talked about, right up there to 420. Now for the spider, a little different chart, right? Because you have the different market, but same thing, man. 420 right there. You have really a nice looking couple daily highs there, and one of them was on the Powell high. That was, what do we got? 419.56 and 419.96. Call that 420. I guess the tough thing would be, and we always like to do scenario analysis here.
Yes.
I mean, if it's bad, like where do you step in? Where do you cover
No,
short?
it can't be bad. Meaning it
can't be
cannot
bad.
come in and it's be higher than expectations. That can't.
Oh,
This
man.
market is not priced for that whatsoever. Nobody was expecting that. There's zero people expecting that. If that happens, we are like going to get murdered.
Limit
That
down.
is not. I don't think there's any possibility that's happening. I mean, we were doing the math yesterday with Christian Fromhertz on his Spaces, which was a lot of fun, by the way. I think we had 900 people. So we had quite a
Really?
few people watching it. Yeah, it was 900 views at the end of it. So some people are coming in, some people coming out. So that's what Christian said. So we had a few people
Wow.
watching it. But we were saying, and what Webb was saying on it, I think it does. I think the number. What'd you originally ask? I went on the tangent. What'd you originally ask?
I'm letting these guys run the show.
Where to step in on the downside?
Yeah.
Like if it comes in bad, and I don't know where.
What is bad though? So the estimate here is 8.1. Prior was 8.5, and before that was 8.7.
Is that what we're looking at coming in as 8.1?
8.1. What is hot to you guys? What would be hot? Would 8.3?
Anything 8.1,
8.2.
anything above it. Anything above it. It's got to
Okay.
come in and beat expectations. This is too much priced in. I mean, look how far we've rallied here. I mean, they cannot stop buying it. They're so hungry for it. It's like everybody, it's like there's people that know it's light. It's going to be light. It's going to be, and I think it's going to be significantly light. And I think you're going to get a continuation here. And everybody's going to be like, then you got the money managers that sold 6 days ago, and they're like, okay, I give up. We're going back to all-time highs. I'm buying. It'll be like 420 or 425 on SPY in a day or two after that. And then there'll be a rug pull in there somehow. And there's so many potential rug pulls still to come. And I'm going to tell you another thing. Is this earnings season that is coming up, and obviously we're still 3 weeks away from it, so you have some time, it's going to suck. There is going to be misses everywhere because we're starting to see warnings. We saw McKesson, or McCormick with the warning, MKC. We also saw this morning Eastman Chemical, EMN, cutting guidance significantly. We have seen some guidance cuts. And I'm not sure if we're sitting up there in the 420 area or higher that the market will be prepared for another crappy earnings season. But it's going to be crappy. So there's lots of potential rug pulls. So I do think this is going to be a selling opportunity here today. And I'm looking at this as not this right now. I think we could see 420. I really do think we could see 420. But the stuff that I bought a few days ago, which obviously I tweeted out there, gets up to this 420, 425, and it's giving you, a pretty good move like Take Two. We know I rebought that. What else did I buy? I bought EA. I bought that fuel cell stock. I put on some risk, and not a ton. But obviously I was bullish the last 4 or 5 days here, so I increased my risk. I think we get up to 420, 425 on SPY. You're taking the profits, and if you don't want to set it out, maybe you're taking it before, just in case the number is in line or hot. Because if it's in line or hot, those profits are going to be gone today.
They bought the. I mean, it's just short term here, but they bought that McCormick and Company off that. I mean, that's just just a note for the Eastman.
Yeah, but Joel, the S&P has been rallying nonstop for 4 days. So you've got to look at this and say, okay, yeah, they bought it. It fell $5. They bought it back too. Well, the market effects on that are driving that back up. Take the market effects out of that, and they're not buying that McCormick. That's all just pure market effects. So, I mean, you've got to look at that and have a huge consideration. I mean, every single stock has been ripping for a week here. So you're hard pressed to find anything that really has been going up. I mean, we had this negative correlation between oil and stocks, and that's completely broken down too, where now it's positively correlated, and the oil stocks are going up with the other stocks as well. So, even oil rallying the last couple of days, market ignoring that. Oil rallies the last couple of days, Joel, and they're like, no, we're buying stocks anyways.
Yeah, it
The
is.
money managers are full on chasing this thing right now, and they might chase it again today if it's a really significantly light number. But at the end of the day, to Money Mitch's point, to my point, there's a lot of problems still happening here. And I don't want to be paying 20, 25 times. As trades, sure. But I'm not loading up my long-term investment account here because I think there's a lot of problems still to come. And that's being Taiwan. China situation, obviously the Russia-Ukraine situation is not going away. Doesn't seem like anytime soon, but the market doesn't seem to care about that anymore, which is sickening. And the inflation is not coming back down to 2% anytime soon, not unless they really get serious about raising rates even more, which they're not going to. If the light number's light, they'll be a little more dovish, hopefully. But I just can't add it all up and say, yeah, all-time highs. Let's go back. It's party time. I think we're in a different situation.
That's why one of the things that I'm going to point to is definitely watch the CME Fed tool. And once this number comes out, see how that changes, because right now it's set at 90% for a 75 basis point hike from the FOMC meeting next week. You could see that 90% quickly change to maybe 70 or even 50. So pay attention to that. I think that's going to give you a little bit of a sign maybe going into the market, but it's going to be tough here because of the run into, 6% run into this number. Question is, was it buy the rumor and sell the news?
It could be. But I think it's going to be significantly light, and I'll be like, whoa, and everybody's be like really jumping in then. And I think that's where they catch them, because last time was the same thing. It was just slightly light, but we'd run up into it. Then they ran it for 3 more days, and then they pulled the rug. So I think there's an inevitable rug pull here. Timing that is going to be interesting. It could happen right at 8:30. The rug pull could happen. If it comes in line or doesn't, come in light, the rug pull happens instantly. I don't think that's going to happen, though. I think it's going to be significantly light. I wouldn't be surprised if you even get a build on this rally, because you got shorts caught all over the place. You got money managers who have too much cash caught. It's the Max Payne trade. This market just tries to punish the maximum amount of participants. It always does. But 2022 is really exceedingly good at that. The shorts have had a rough go because there's been wicked short squeezes. The longs have a rough go because there's wicked sell-offs. And there's snapbacks, and the only person making the money has been the contrarian. That is really, what has worked in this market, which is obviously fading the overall moves. So when we come back, we look here. It all matters. 17 minutes. We're going to have a lot more information. We can digest that further after the 8:30 number.
Yeah, I just want to say I've never really understood McCormick and Company. I mean, a little bottle of vanilla. I mean, that lasts you for like 2-3 years. And the
How do they keep selling more?
Yeah, I mean, what they got to do
it.
is they got to make smaller bottles and charge more. Is what they have to do. I mean, I never understood that. But let's get our earnings stock out of the way, and Oracle.
All right, let's go to Oracle. I got one more thing. We'll get back to it, though.
Once I'm sorry, Mitch. What
no worries.
Did you want
I just wanted to bring in the food index, because if we pay attention to specifics in the CPI data, what kept us up last report?
Food was
it was
hot.
The food index. So the food index increased 1.1% in July. That was the 7th consecutive monthly increase of 0.9% or more. The food at home index rose 1.3% in July, as all 6 major grocery stores food groups index increase. So if we're taking a look at what could have gone up, this is the area to probably watch when the CPI report comes out, because this is what held us up.
Because we know gas is going to help significantly.
Exactly.
Like gas fell what did gas fall in August here? Like 8%, 9%? It fell a lot, maybe 10%.
Yeah, I mean, but it's not going to be too much different than last month, but it's also not affecting it towards the upside. That's for sure. It's definitely towards the downside there. And then other areas, of course, is sticky rent. Rent is the area where it's just hard to see the inflation come down. And let's say, a 2-month period, it just doesn't affect as much. So if there's areas where we could see inflation still stick around,
we
probably
will.
In those areas.
It's a matter whether the commodity pricing offsets it enough, because obviously labor is very sticky too. I mean, this is one thing that's built into everything to make things inflation. People are asking for raises everywhere, and that is still happening. Like, we're kind of in the thick of that. It's like, okay, well, I'm going to the grocery store. I'm spending $200 now. I'm not spending $125 anymore. I need to make more money. And labor shortage is driving up labor prices, and that in turn drives up material costs as well, because labor goes into the, obviously making stuff. So it's all that stuff. There is some of the stuff that's sticky, and that's why it's going to be tough for the Fed to just bring it back down to 2%. That's why, we've had this escalation. Obviously, commodity prices are going to help significantly, but to Mitch's point, there's going to be some stuff that isn't going to help this month.
All right, let's go towards that earning stock now. Now, one thing I would say about this earning stock is it's so important to report on the right days, because when you report on the right days, it definitely helps out the stock there. Oracle coming in with a miss and a miss, but it goes up. Let's talk about that. Oracle's numbers here coming in at $1.03, missing the $1.07 estimate. Sales at $11.45 billion, missing the $11.46 billion estimate. And when you looked at guidance, it was mainly in line.
This is again the story that this is a silver lining market here right now, and they're like, well, it wasn't bad. They didn't cut guidance. Let's buy stocks, because they initially hit this, Joel, and they hit it. And I mean, to your levels, they hit it right down into the support, all kinds of support.
Oh, really?
74.
Oh boy.
They hit it right into that support, and it stayed down there for less than a couple of minutes, and it bounced right back here again. The FOMO's out there. They're trying to find dips to buy. They're like, Oracle's a good company. I owned Oracle in my long-term investment portfolio for a better part of a decade. It's just come up so much. I bought this at $9 during the financial crisis, and it got up over 100, obviously. So you're talking about a 10-bagger. A 10-bagger over the course of 10 years. It's still cheap. Like, the stock is not expensive, but it's never had a market multiple. It's not a huge growth engine. So it's always had, quite a bit less. I think it trades 14 or 15 times earnings. It's not expensive. And I did say I would put this back in my portfolio at a certain price. I don't know where. But, obviously money managers are looking to add stocks because of this move. They see a dip on Oracle last night. They're like, get me in there. I got to get my money to work.
Pre-market high, 78.84. Not much there. We got a little gap to fill. Looks like we're going to do that. That's actually at 78.44. Another daily high, if you're looking for more on the upside, 79.13. And then there was a big seller at 80. I see those 3-4 highs congregated there. So I think a lot of this will be market dependent. I mean, if we get a good number, the rally continues, maybe you could see this in the upper 79s, but it was up there for 4 days before it tanked, and that was also market influences. And then I'll just have to say, if you want to spend less at the grocery store, forget your wallet like I did, and then you won't be able to buy.
Did you do that? When did you do
that? I told the Kroger story. Remember last week when I forgot I was going, and I only had enough money in the bottles to buy my secret coleslaw.
Yeah, when you were panhandling in Kroger's. Yeah,
I was considering panhandling in Kroger.
I saw you, Joel. You didn't get my coin. Well, let's keep going. Let's get towards the Eastman outlook. You mentioned it a little bit earlier, Dennis, but let's touch it really quickly. EMN here coming with kind of an pre-announcement there of the third quarter adjusted earnings per share expected to approximately be at $2. And the previous expectations were an EPS of $2.46. So this is one area where, we should continue to watch to see if the trend continues.
It's not going to be earnings season coming up. It's going to be earnings warning season. That's what is going to come up. And I'm just, right now saying this is the season coming up. You're going to start seeing it happen sooner than later, because we're coming into earnings season and companies already know that this quarter is not going to be good. And I mean, why is it not going to be good? Because the consumer is getting crunched. We know they're getting crunched. They have to be getting crunched. And we can see it in the data. And we can see, obviously, this is what the Fed is trying to induce. This is the Fed's plans. It has to play out this way. In order to get inflation in check, the consumer needs to get crunched, and there's going to be suffering on, on obviously certain companies. Obviously, not everybody just stops buying everything. Certain things are sticky. People are still going to buy food. They got to eat. But those discretionary items or other things, Eastman Chemical, obviously, plastics and everything else, there's some discretion in there. There's some stuff you need, but there's some discretion in there too. And you're seeing, that stock come down here. Right now, if you look, you say, oh, it's down 26 cents, but that's not true. You got to look always at your montage and look where it's offered. It's offered at $92 right now. Wow. 92.75, 92. So it's looking down $3 here right now. So it is going to get hit on here this morning. The question is, do money managers come back in at this like 89 to 90 area
There you
where there's
go.
support,
Yeah.
and buy the dip? I guess it depends on what the 830 CPI number is.
Yeah, I'll give you a little zone here on the downside if you're looking for a little. And Dennis nailed it at $89 area. The other low was at 88.11. But when I see four lows, the same area after a stock traded at $96 the previous day, I think the bit could be some bids there offered at 92. Show them an 89 bid, Dennis. See if you get hit.
It's 86 bid right there now. So it's odd lots. There's odd lots all over the place. Odd lot bid 91, odd lot bid 90. There's odd lots, but yeah, you're
checking
right.
out. They're sniffing. They're sniffing out the algos. They're sniffing out you, Triple D. They want to see what your next move is. But Eastman Chemical trading down. We'll see. That's monthly support too. The monthly low, your July low, if you're looking for more. Ooh, that's way down at 84.95. But let's see what happens just under 90.
It's going to be interesting. I'm starting to get the butterflies going 8 minutes away from the biggest. Last month was the biggest CPI report ever. Now this month is the biggest CPI report ever. So
always, there's always something that's on the forefront and something that investors got to keep eyes on. Let's keep going. Let's get into the biggest gainer of the day, which is Acrio Therapeutics. Shares trading higher after the company's phase 2 Harmony study met its primary endpoints for both 50 milligrams and 28 milligrams EFX dose groups. So it looks like some good phase 2 numbers, and kapow! That's how these biotechs will go. When they get good numbers and bad numbers.
Sentiment has turned when you start seeing responses to these, to these drug trials. And it was muted responses there for a long time as we were kind of fighting this bear market. XBI was getting, down every single day. It seemed like company comes out with good drug news, and then 2 days later it just starts to leak it away. And it's like, man, they just can't even hold gains on these good drug news. It's different here now. XBI has had a sustained rally since really since May. I mean, if you go back and you want to look, it was kind of with the Kathy bottom there. And XBI is up substantially since then. And it's a good feeler for, hey, sentiment has turned towards some of these drug names, some of the smaller ones. Obviously, XBI is full of the small ones, more speculative plays. And, when they do have good drug news, there is a decent response to them now. So back to a little bit to more normalized markets. That is normal. Like when we were getting, in the early part of 2022, you'd have the response, you'd have the good trial, and the stock would pop, and then it wouldn't even hold the pop. You remember Bluebird Bio had the initial pop in June. It went from 3 to 6, and then 3 days later it was back at 3, and I was like, what? And I own Bluebird Bio, full disclosure. It's been a bag for me from my RSP for a long, long time. But I was like looking at that, I was like 3 to 6. I was like, oh, it's pretty good. And then 4 days later, it's back at 3. I was like, didn't they just have a good trial? Didn't they just do something solid, and it gave it all back? And now you can see the stock's up at $7 and it started to come back. So there was opportunities there. So that's the good news. On this specific company, I don't follow it at all, so I can't tell you anything more.
Farmo Bro is out of prison.
Who is that?
Martin.
Oh, I know. He's been out for a while.
Yeah. I was lost there.
Yeah, no, he had me lost too. Joe gets us lost every once in a while, but
I was like, hold on.
When Martin came on our show, he was so professional. He was very professional when he was on our show because, he had like the clown show and a little bit other stuff in his own personal life happening before he obviously ended up going to jail. But when he came on our show before he went to jail, and he was very, very professional. He gave us some good stock picks. He's very knowledgeable in the pharmaceutical industry. That guy's got a lot of knowledge there. If he could have just kept his head on straight, he probably could have been obviously wouldn't have had to go to jail if he would have kept his head on straight. But
I'll say he's no Milton.
No, Milton, yeah.
I can't. We've only had 2 people on the show go to jail, and I can't.
Who was the second one?
Oh man,
Martin, and who else went to jail?
It was.
Did we have Milton?
It was nah, Mitch. This is like I think you were still
before my time.
You were still in junior high, man. You were in junior high school, man.
We're talking Martin Shkreli.
Yeah,
his last name's so hard to say. Shkreli.
Shkreli.
It's so hard to say it. I think it's Shkreli.
Yeah. I don't want to say his name, but I'll have to look because I'm not for sure who it is. But I know Spencer's like, Well, I don't think we ought to have him on the show anymore. I'm like, good call, Spencer. All right.
I'm probably like, why? And he'd be like, he's in jail. I was like, oh, that's a good reason.
Yep. We
You
can't
get
take
one phone call and he
collect
calls
calls.
pre-market prep.
It's the pre-market prep.
Collect
Live
call.
from jail.
Collect call.
Are you gonna
from,
get my bail? No.
Broward
sorry.
County jails. We do have a bails bondsman in the chat. He's always around, so my man. Who knows? Maybe we get him to bail out. But let's go ahead. Let's get towards the next topic, which is they need a bailout. Is Peloton? Peloton needs a bailout here. Peloton announcing Monday that their co-founder, John Foley, is resigning as executive chairman. Chief legal officer Kushi is another co-founder, is also departing. He will be replaced by Uber veteran Tammy Aberin. And so this is interesting because at the end of the day, Peloton has tried to do everything they can to their business model to kind of adjust it. They've done the third party. They've done Amazon. They did it all. And now the founders are heading out the door. Is this the time to head out the door also as an investor?
They
Don't ask
again,
me.
they didn't know what to do with this last night. So they initially dropped it, and then they popped it, and then they dropped it, and then they kind of just brought it back in. So they didn't know what to do with it. Like, obviously, they're like, oh, maybe new management's going to be the way to go here. But then Foley, obviously, is a loss in itself. So I think they didn't know what to do with it. I think they still don't know what to do with this headline. So obviously Peloton has significant problems. This is not a stock I want in my long-term portfolio. I've hated it for basically forever, since from a long time ago here. It's $11. I think eventually it's going to be in single digits, and I think it's going to be not one of these.
Data, man. They got data. They got data.
They got data on everybody? Is that what they're going to do?
Yeah,
Become
they
a
got
data
their
company?
data machine. Yeah. That's what I'm hoping.
I'm getting ready for this number, though, so I'm going to get ready for the number. It's 3 minutes away. I will be back at you when I can. We're going to have Raghee Horner carrying you through the number here as well. She's going to be here just slightly after me, so
if not, Dennis, we'll catch you tomorrow.
I'll be back. It's just a matter of it's going to be at 8:55.
I like that one. We'll catch you
tomorrow.
tomorrow.
It's going to be back. It's going to be
that?
interesting. It's already really choppy ahead of this number, so I'll be back at you.
I see you. I see you. All right. Well, we'll go ahead and review the numbers here and take a look at. We're about to get it. 8:30. It's 8:27. Let's see if there's some. There's usually some front runners here. Let's see if they start hitting the tape there. I don't know if you see any action right now, but we know how they like to run that number.
Oh no, they're jamming up my train station's getting jammed up. No, here we go. Come on, baby. Oh boy. Come on, this is the fun time with it. Come on, move. Okay, move. We'll go this here. Oh man, can I get a 1 minute up here? No.
Can we get the 1 minute?
Yeah.
Here, let me put.
There we go. We got the 1 minute just in the nick of time.
Preview it again, Mitch. I'm in the background listening. Preview it again.
Got you right now. I was just setting up something here. I'll get to the preview right now. So I'll give you guys all the numbers here and the ones that we're really going to pay attention to. So of course, we're getting CPI year over year. We're getting core CPI, and we're getting CPI month over month. The core CPI month over month, and CPI. Those are ones we really pay attention to. And then the yearly number is the one that you hear a lot of talk on the media, right? The yearly number estimate is 8.1. Prior was 8.5. Then when we get to core CPI that excludes energy and food, this is one that is estimated at an increase of 0.3. Prior was 0.3. If we look at CPI overall, this is where we're expected to come down. The estimate is negative 0.1. And so this is definitely the number to kind of keep on watch. Anything in the positive here for CPI would not be a good number for the overall year over year number. And then, of course, the year over year number is one of the ones that's going to be talked about often. 8.1, the estimate. Do we get in the sevens? Do we come in higher at 8.3, 8.5? I'm going to go on a limb here and say 8.0.
Okay, I have absolutely no idea. The algo jumpers took it up
they're already
64.75, and then the algo slammers took it down to 58. So those are your early parameters here. That number, if we were on CNBC, we'd say job number imminent, but we shall see. 51.64. They like it. They don't like it. Let's see.
They like it. They don't like it.
They don't. It's hot. It's really hot. Wow, it's hot.
Hey, I was kind of warning. We'll
Super hot.
see. First
Yep.
number, yeah. I mean, I just hope
8.3.
some people always were able to take some profits, but we'll see. You
Yep.
never
It's
know.
hot.
That's the thing about CPIs. You never know.
Everyone leaning the wrong way on this one, folks. I knew it when we were on that Twitter space, and all four of us thought it was going to be soft. Look at that, man. That is a huge move down. We just stayed down to 91.75. Believe it or not, 40.80 and a quarter was Monday's low. We'll see if we get to that probably in about 18 seconds. That's the only number I have here is 40.80 and a
All right,
quarter. That was Monday's.
8.3 for the overall number, and the core CPI at 0.6 versus 0.3. Really hot there for core CPI. Not what we are expecting to see here. And there you guys have it. That's as easy as things can change. And if you didn't take profits, it's going to be a tough one now. Definitely getting hit hard. CPI month over month. Here at 0.6 versus the 0.3 estimate. That's why I said, will we get higher there? And also year over year coming in at 8.3 versus the 8.1 expected there. And that's definitely going to get it a little bit higher there. Didn't even get into the 7 handle. Didn't get to the 8.0 that I thought maybe you would get to.
Nope.
It just dropped only 0.2%, showing you what? Inflation is sticky. And the Fed is here to do what their job is, and that's to pump inflation
you had
right
the street.
back down.
You had everyone leaning the exact wrong way into this report. I mean, there were buyers, and now the total complexion of the market has changed. We got down to 40.55 and a half here, and there it just slamming it straight down. That's a 1 minute bar. That's about as big 1 minute bar you're going to see in the S&Ps if you're ever going to see. How many handles? Wow. And who took it up to 41.75 on that? That must have been a miscue. If you got jammed on a buy stop on that, you had absolutely no chance. But right now, we have a 120-point range right now. We are expecting only a 71.5 handle range. So it's going to be
Right
an
back into the
expanded range
405s.
down. Yep. Let's see what we
And
got.
so where we're heading to right now is an important level too, which is the 50 moving average, 403.33. We're going to see if that can hold today. I know technical traders will be watching that level.
Don't know about that level, but I'll just give you daily levels. It's all I can give you. Your next daily low on the D's contract is 40.22 and a half. And I don't know if that was an intraday low from that day or not. Boom. Intraday low on that day was above that 39.59 and a half, but we're talking about the 39s. Do we have any lows? And no lows in the 4,000 handle? That is incredible. 40 intraday low 40.43.75. So that's what you're looking at, not what the street wanted. Got right back near that Powell area within, I don't know, on that uptick there, we got about within 30 handles, and now we're right back down. So sell the rip, sell the rip works again, and there was a rip there.
Food increasing 0.8% in August, the smallest monthly increase in the index since December 2021. So at least that's looking a little bit better here. I'm trying to see what was really in here that came in hot. And so if I could take a look there, I see energy services actually spiked. So electricity and utility for piped gas service, so natural gas a lot, gave that spike on back up in energy.
All right. I see Raghee Horner, our managing director of futures at Simpler Trading, and she's going to explain this and put it in simple terms. Raghee, how you doing today?
I am doing well. Thank you for having me. What a CPI.
We have had the street leaning the wrong way, including us here. We're looking for a light number, and the question is, and I mentioned this to Dennis. I knew where I wanted to sell a big rep, but I really don't have an area where I want to step in and buy the dip here. Give us your analysis of the CPI here, and let's try and look forward from this disastrous money.
Two things I'll take a look at, sort of starting at that 40,000 foot view. If we take a look at where this maps to in the most glacial way, it's going to be what do we see at the end of this year. So it's a lot more slow moving, but it's a much bigger implication. Are we going to see the Federal Reserve move off what we've been thinking all year is going to be a target rate at about 3.75% to 4%? That has not changed in any significant way. That's been the most probable outcome for a few weeks now, and it continues to be. So it's not as if we bumped higher in a significant way to say a 4 to 4.25 expectation. So end of year expectations are still there. So that's the macro. What about, say, technically? And I'm just looking at the daily time frame. We had that gap up on Sunday. So Sunday's open, 6 p.m. Eastern, big gap up. We closed it. We just closed it. We came down to about 40.67 on the S&P futures. And I would suspect, and you can see a little volume sitting there, so we have a nice volume ledge. I suspect that should hold. We'll see when we get that echo at 9:30, that 8:30 reaction. We might see an echo of at 9:30, but I'm looking for this market to close the gap and start to stabilize again. I'm bullish. That's sort of the punchline.
Well, you bullish and you're getting a pullback here. Go a little bit more because that's another thing too. I mean, we do a daily trading show, and we try and give trading ideas for the day, for the 2 days, 3 days of the week. But you know that longer view, I think, is always important to have in the back of your mind. And you talked about expectations for December. We've also had Blue Putnam on from the CME, and he told us, it just this stuff just doesn't turn around overnight. So that the numbers to filter themselves through the interest rates that take effect here. So I mean, December is a long way away. So you're still just trying to keep your expectations for that. So we got what we'll have October, November. So we got three more numbers coming out, right? And I guess that you'll use that as your mandate in the markets to set your roadmap for 23.
So if I take a look at time frame and time horizons, I think that's sort of what we're talking about, sort of below the surface. As a day trader, I need the market to open. I'm taking a look at some levels, right back to that Sunday open and that Friday close. So technically, if I'm thinking about just today, what's going to happen on Tuesday, I'm going to keep a really close eye on 40.66 That was the close on Friday in the S&P futures. So again, that's a level I'll be watching
Good.
to see if we stabilize above, say, 10 a.m. We stabilize above that. And then to your point, longer term, yeah, I mean, December does feel eons away, doesn't it? But I guess the best way to not get caught up in sort of this gyration of, oh my gosh, what does CPI mean? It means a lot right now at 8:38 Eastern, right? But I don't know that it means a lot next week or even the week after, because next week we get the Federal Reserve, and this will be a distant memory. So I'll take today for today, and it looks like we're breaking 40.66 right now. Let's see where we are at 10 o'clock, and then I'll just day trade today, and I'll focus on the long-term opportunities on the pullback. I'd love to see, I mean, if I could get my way, I'd love to see something around 40.50, 40.45 on the
Okay.
S&P and start thinking about buying.
Yeah, it's tough because you just had such the run up. So you have all the people that got caught, being long selling. Oh man, I don't know where to. I mean, I see the levels that you're talking about. I mean, I just have to go with the daily levels, and for I don't know. Am I going to get a look at 40.2250 today? That was your low on Friday. I'm talking the December contract now, because I've moved over from from because we have the expiration on Friday. The dollar is down here, and it's just off its lows for the session. So I mean, that is supposed to be a positive for the market, but not today. Today it's acting as a negative.
Near-term September Fed fund futures are showing that we're actually starting to entertain the notion of a full 100 basis points.
Cool.
While that's probably less than, I'm taking a look right now, probably less than 15%, the fact that that conversation is even happening for a full percentage point hike, I mean, that's incredibly hawkish, and that's going to be very bearish for equities in the near term, right? In the near term. But it's interesting, and you mentioned something so powerful in the dollar. Why would the dollar be selling off? Because if we indeed are so much more hawkish, and I think that's the measuring stick, just because we might hike a little quicker in the near term, does it change what the ultimate target rate probability is going to be come December? And that's showing it's not. And that would then be fairly bearish to the dollar. So if we're worried about a more hawkish Fed, the dollar's telling us not to be. It's just that we might hike quicker to get to that same target rate probability.
All right, let's talk some of the other futures here. Crude had a nice 2-day rally here. Not close to nine. Well, got to 89.31. Now back at 88. I mean, I guess this is just another dagger in the heart for crude oil traders, right? Because this is not good. More inflationary pressures. People have less money to spend on traveling and whatnot. Give us your near term and long term outlook for crude.
Crude's in a downtrend when I look at it technically. Then we take a look at what the Saudis said this morning regarding OPEC. They boosted output in August by something around 11 million barrels per day. And I then expect where we are right now, right around that 21 exponential, likely that's going to hold within the context of this downtrend. We can look at that as likely a fairly aggressive reversion to the mean. So I'm bearish crude overall. And then we start to see output, increase from OPEC. No reason not to stick with that.
All right, I'm going to jump in here now. Of course, with these numbers that are coming in and the don't fight the Fed mentality, I'm a little lost of words here for the bullish outlook. A lot of the people in the chat are also confused. Can you kind of talk some sense into us? Is this kind of more of an approach that you're looking towards 2023, or is it just more along something that you feel that these bottoms and June lows are kind of going to be able to hold?
So I think the most important thing, I think amongst all of us, is what is our time frame and what is our time horizon? So give you an idea, sitting here in my office, I've got a 5-minute chart, I've got a daily chart, and I've got a weekly chart in front of me. And I'm looking at all three of them, but all three of them elicit a completely different time horizon for me. So as a day trader today, I'll probably short the ribs, right? So I'll start looking at a 5-minute time frame for today as a bear, but that's a very short time horizon. When we step out to post FOMC, when we step out to October, when we step out to by the time we get to the end of the year, what's scaring us, right? That's what I ask myself. We don't care about recession. We don't even know what that means anymore because we've redefined it. So if we don't know what it means, recession, we've already dismissed that. So then the next thing is there an economic slowdown? That's been talked about for forever. And again, I don't see necessarily that factoring in either. So why did we rip higher? Or if we step back and say, why do we have this epic short squeeze from say 3,900 on the S&P futures? Because the target rate probability where the Federal Reserve is going to hike to by the end of the year is pretty steady. And while the pace to get there may be bumpy, and that could cause some near-term weakness, I have a hard time thinking that new lows are what is ahead versus, we might chop around a bit, but I'm going to be mostly looking for buys. And that's that longer term time horizon. So I think time frames might help, and that maps to how long I may be in a trade. I don't know if that helps.
Now, one thing, of course, you just kind of mentioned the benchmark and the fund rate. Where do you see that going to? Do you see them hiking still in 2023, or are you on the camp like the CME Fed tool, kind of a pivot there going into 23?
I look at that CME Fed tool. The market doesn't care what my feelings or my gut have to say. So I look right to February and March. This is where things get a little tricky. There was some talk that we would peak and plateau in December. And while that's not a high probability to see another quarter point hike in either February or March, that is irritatingly still a conversation that we're going to end up having for February and or March's meeting. So there's still probably one more quarter point hike in the cards early next year. But again, what we know can't scare us as much as what we don't know. And as long as we're still sitting at, where we are in December, which has been steady, and then maybe one more hike early next year, I have a hard time thinking that this sky is falling mentality is going to map past even the next Fed meeting.
Now, this is definitely something to watch. Now, one thing that I know, and I'm just trying to go through the report also as we speak. So the biggest thing that I saw increase here was the index for natural gas. Are you concerned about natural gas continuing here, keeping inflation high?
I don't know that natty gas concerns me as much because it's pretty much behaving in a way that we would presume is seasonally relevant. It can't be shocking when we see natty gas rally through summer, which is seasonally when we see that strength going into August, September. Between August and October, it's still grinding higher, but it's far more choppy. So natty's acting like natty. And again, my filter is, are we surprised? And I can't look at what's happening with natty and say, no, we're significantly surprised. This looks like typical seasonal behavior. And unless we get over, say, 10 on natty gas futures and we start making higher highs from there, this looks pretty much like we would see this time of year.
Is there anything you're absolutely avoiding? Is there anything that you're like hands off on? Europe? Anything that you would just like, you're not looking to buy the dip on?
Well, so great question. So I'll buy the dip on anything trending, right? So the conversation I'm having about natty or the conversation that we're having about the S&P, I would not call those buy the dips, because buy the dip, the precursor to that is we're in a trend. So unless I have a trend, there's no dip to buy. Dip being synonymous with a swing or a retracement or a regression to the mean. That's all trending environment. So then my job as a trader is to spend about 80% of my time building that watch list. What is still in an uptrend and what isn't? Things are going back into chop. So I'm going to throw a slow stochastic on my chart. I'm going to keep a slightly shorter time horizon, even on the daily, maybe a few days to a few weeks. And I'll be more nimble about fading oversold and overbought until the trend comes back and I can get back to buy the dip.
All right, one more thing for you. What about Q3 earnings season? A lot of companies got passes in Q2. A lot of the big companies did not have good reports. You've also had more than one earnings, guidance cuts. How do you feel about Q3 earnings coming up?
I think you said the perfect thing. If we're already talking about guidance cuts, again, right back to my filter, are we surprised by this? So if we're already seeing guidance cuts, it's baked in. We're already to a certain degree pricing that reality in. But I kind of go back to, in any, whether that be going back to 2 decades of Forex trading, or whether I'm looking at the central bank impact on equities, the Fed is the macro right now. So earnings are going to be eclipsed by whatever Powell and company want to communicate about their intentions about where we're going to peak on those target rate probabilities. But the more the companies want to prepare us for disappointment, the happier I am, because now that's slowly being priced in rather than a shocking earnings miss. And that's great. That's great. That's what I want to see for stability.
Well, Mitch, we threw everything at her but the kitchen sink. And she stood her ground, and her long bull. I see the points that you're making. Raghee Horner, she's the manager of futures over there at Simpler Trading, giving us a simplistic look at the market. I really appreciate it, Raghee, and we certainly got a lot to follow here. And everyone's saying, Raghee, make her a regular guest. Make her a regular guest. So. You're always great, easy to come on. I really appreciate it, and go get them. We'll talk to you soon.
Thank you. You guys make me look good. Are you kidding me? This is as smart as I'm going to be today.
Gotta throw some softballs at it.
Thank you very much.
All right.
Mitch is like, I don't know what to say. I'm like, go at her, man. Go at her.
Yeah,
Raghee's
I'm
Raghee's
confused. And you guys know that there's certain times where I get a little, confused, and I mean, you got to admit it. When you're confused, don't run from that confusion. Try to understand that confusion, right? You know, long term, I understand the bullish outlook. Right now, I'm like, just don't fight the Fed. Don't fight the Fed until that kind of changes. I think it's something that we'll keep on watch. And if I take a look at what numbers went higher, it's, to me, what stands out is the only things that are above kind of 1%. Kind of change, seasonal change. And that's where it looks like it's electricity and utilities that kept us higher. It was utilities with about 33% of that unadjusted 12-month outlook there. And that's what carried a lot of it, right? And I mean, now we need to keep on watch, but I think natural gas is looking like more important to watch than even oil itself here. Because that's what showed up in the CPI report to keep us a little bit higher. And now food index did go down a little bit, but it still increased, right? Increase here rose 0.6% after increasing 0.3% in July. So if you're looking at what else is going on up, well, you still got some other things pointing towards the upside, and we'll see what happens now. I know Dennis probably got caught with his eyes open. He had that the Looney Tunes or the cartoon eyes, when they pop on out, like, wow. That was him when that hit the tape. You know what I mean? You could just imagine.
You can't even, can you imagine if they tried to put like Bugs Bunny and the Roadrunner on now?
Man, I still watch him, Joel. I still watch him.
Okay, so when Raghee was on there, I had to do some digging, and I found an intraday low. Now let me explain this. They're two different kind. I have two different kind of lows that I track in the market. One is the intraday low, so that takes place between 9:30 and 4 o'clock. All right, so it's a level, but it's like it's not. I don't even make it a 2-star, right? Because it's an intraday low. So the intraday low from Friday is 40.43.75. That ain't too far away. That's only 13 handles away. So that is a asterisk 1-star. The Friday's true low, which was right there with Thursday's close, is 40.22.5. And who knows? We may be there we may be there soon. So not going any lower than that right now, but that's what I come up with. And I can just take my level sheet and I can just fold it over here because we're not going back up to that part of it. We're going to be staying down here. I mean, I don't even know on a rip. I mean, you probably get a little buying off the open here, but
yeah,
oh boy.
Man. I was feeling you guys a little too bullish this morning.
Everyone was too bullish. I know. Like we were on that Twitter thing yesterday, and
I could see it.
All three of the guys, they went ahead and they're like, "Yeah, it's gonna be light, gonna be light, gonna be light." And I like, just the contrarian in me just wanted to say no.
I was feeling it.
What's up,
Mitch? Like, it's not just me. It's not just two other guys. The whole entire freaking world thought it was going to be
95% of people.
99.9% thought that number was going to be light. This is an epic disaster.
It is.
It's an epic disaster. Call it what it is. I have been selling stocks nonstop for 23 minutes straight. I have not even thought about buying anything. I've just been selling every freaking stock I could possibly sell for 23 minutes straight. You've got to adjust. You've got to be fast. That's why I'm not sitting here doing a radio show on, when you got action like this. I'm just selling. Don't even worry about it. You see that number, you just sell. You don't think, you sell. 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 Sell again. This is an epic freaking disaster.
Even a good position that I had on Oxy, I'm probably going to be closing it towards the open here as it's pulling back fast. Oil's pulling back. Everything's You
need to close all this stuff 20 minutes
The only thing is I'm on live.
I've just been selling as much as I possibly could, as quickly as I possibly can. And that's what every algo has been doing. It's what every money manager has been doing. You think we're snapping back from this? I don't think so. I think you've got everybody caught. I think everybody thought it was going to be light. I think everybody thought, well,
Well,
okay, maybe this is the case where the Fed can cool it for a bit. They can't cool it at all. This is
I'm
just
still
a disaster.
I'm still in the camp that inflation,
I'm shocked.
hasn't truly peaked. I still think it can go back to
You must be
the
killing it,
highs.
Mitch, then, because I mean, absolutely
not even though,
shocked.
because it's not. I'm not positioned for it, and I think it's almost impossible to position for it up here at 413s on the SPY and positions to short there. You just don't know. You don't know. The only thing you can do is react.
Dead wrong going into this number, along with the other 99% of the people. I thought it had to be light. I cannot believe it came in hot. I did not think there was even a remote chance. Tim Seymour last night on CBC, there's no chance it's coming in hot. Everybody is caught on this. Yeah. This didn't just catch a couple people. This caught everyone. This caught everyone, Mitch. This caught a lot of people. This is why it's so violent. We just dropped, 100 S&P handles.
130.
130 S&P handles here, 110, or whatever. I mean, this is crazy. So it's why I have a lot of cash in the long-term portfolio, but I'm caught on the wrong side on the trade here. So that's why I was like, I'm trying to get out. And you're just working, you're just hitting bids. As soon as that started happening, I started hitting bids as fast as I possibly could. And that's all you can do. I mean, I'm looking at my, at 8:30, I'm hitting, I'm hitting GE, I'm hitting
where did it come from?
I'm hitting Unity, I'm hitting AMD, I'm hitting everything I possibly. I'm hitting Bank America. I'm just going through the trades. I'm hitting XLF. I'm hitting. I had some CCJ. I'm hitting Box. I'm hitting Nvidia. I'm hitting Mosaic. I'm hitting EA. I'm hitting.
Did you go below the offer, or did you go right into bid?
You don't. You hit the bids, Joel.
Oh, I asked if
there's no like, oh yeah, okay.
I meant below the bid. I meant below the bid. I didn't mean below the offer.
No, you hit whatever bids are there. When you're trading these numbers, you hit the bid.
What's on the bid.
What's on the bid? Boom, you got it. You want it, G? You want it down 20 cents? You got them all. Go.
Now, one that I'm looking at.
You like it? Got them.
And I got more.
Don't sit.
And I got more. You hit the bid and then you offer lower is what you do.
What about long natty gas? What do you guys think about that? I don't
think long anything right now. I can't even get
by. Yeah, no one's going to afford natty gas, Mitch.
Right
no
I don't know. It's going up.
My thought process is nothing about buying right now. Oh, it's a nice dip. Okay, let's come in here at 407 and 406. No. Do you know what just printed here? Do you know how many people are caught?
It was. I mean, when we were discussing the setup, it was like, I posed the question to you. I mean, I knew where I wanted to sell. I mean, I knew, of course, it never got near there, but I didn't have any place I wanted to buy. I didn't have any place where I'm like, okay, this is going to buy the dip. And, right now, I mean, it's like, where do you go? 3,900? I mean, 3,600? I mean, we'll just have to let it settle out today. Right now, it is.
There has not been even a sniff. Bring up the SPY chart. There hasn't been a sniff of a bounce here. And this is because nobody saw this coming, man. Nobody saw this coming. Look at that chart. When's the last time you see a move like that down 130 points with no bounce?
I was showing
not even a smidgen of a bounce.
I was showing the 1 minute bars, and I don't think I've seen a 1 minute bar in the SPOOs since COVID. That's been like that. I don't think. Yeah. Yep, absolutely violent. And then, we talk about, expanded, range, to the downside. You're getting it today right there, that 43.75. Now we're looking at Friday's low, Globex low at 40.22. We're down 2%. So no other way to put it, man. I mean, you have to adjust, and the market not only threw us a curveball, but Wall Street got caught leaning the wrong way. I guess.
Oh my gosh!
I'll say it like you like to say. The market likes to hurt where it can hurt the most.
It hurt, and it hurt everyone here. And I know you can say, okay, yeah, there was some bears out there. We just rallied 200 points ahead of this number. There was so many people who, and including myself, who I thought it was going to be light. I predicted it was going to be light because that's why I bought it a week ago. I was buying stocks because I thought it was going to be light. And I was like, well, everybody's on it. You got to take the money and run in this market. It shows you again, I should have been selling everything that I bought yesterday. You sell in this morning, it's already too late. You just gave back half the gain. I mean, maybe it's not too late, actually. I don't even know if it is too late to sell here because I'm not coming and buying this dip. I mean, maybe they do, and maybe you just have that mentality. I think if you get a rip here, you sell it with two hands. We got up to like 405, 406. I think you're selling stocks. I think you're not even thinking about like what I can buy here. You're thinking about what bounce I can sell. I think that's the way I'm approaching it. Maybe I'm wrong. Maybe we're just going to come back and it's all going to be, but you add it all up here. This is going to make the Fed say, what?
Does this give them the 1 point, the 400 point basis on the table now?
It's not even that. What's on the table after the 100 points?
Yes, and
it's not.
Why do people still feel? I don't understand this. My biggest thing is, where the hell do these analysts see the Fed pivoting? There is no reason to pivot.
No,
there's no reason. Inflation hasn't gone down a single bit, maybe less than 1%.
Yeah, there's no pivot.
I don't know where they're seeing this 23
I was hoping
pivot.
it would be. I was hoping for the market and for my long-term portfolio. Yes, I'm half cash, but I'm half stocks too. So it sucks when your long-term portfolio is half stocks and still getting hit. I was hoping that it was going to be decent as well. I was hoping that it was going to be a really light number and we were going to see a sustained rally and it was going to get up to 420. I was going to sell some more stocks. Not the case. This is complete curveball. Did not see this coming, along with the rest of the market participants, because obviously did not see this coming. This number did not leak, Joel.
This is why
this did not leak.
No, to me,
nobody.
You know what
I'm gonna let you guys finish up. Friday's low. That looks like on the deck. That's the next thing. 40.2250 in the S&Ps. So it's your next target on the downside, and then that psychological 4,000 level. But Triple D, I'll check in with you later. I mean, not a great market, but that was one hell of a fun show. Thanks for joining us.
All right. One thing
I said, jaw dropper, just still on this number.
Yeah,
I still can't believe it.
Well, yeah, I described it for you. You had the Looney Tune eyes, but
oh, did I? Oh yeah, when that hit, I was like, I'm like, I wasn't even prepared for it, and I'm like, hit the bid, hit the bid. And Dennis, it helps my day trading because I'm hitting bids, and I'm like, I was not positioned for this, not at all.
It was
so you're just like scrambling around trying not to get killed.
6% run.
I hit a lot of bids,
number,
and I'm still probably going to lose money today.
I mean,
I hit a lot of bids, and I'm still going to lose money today, I think.
Yeah, it's difficult on a day like today to adjust. But one of the things is, I'm sure, and you're thinking the same, it's lose very small or win very small type of day. And that's okay too. That's way better than lose big on a day like today.
Oh yeah,
right?
Lose small is a win today. When you're dead wrong, and I was. I mean, obviously I was right with the rally up into it, but I did not think the number was going to be hot. And the whole market's dead wrong. I mean, that was the most vicious 4-day rally into a number that you could get. We were like 200 points into the number because everybody's like, oh, it's going to be light. And then it comes in not light and pretty hot. I mean, it wasn't like, bleeding your eyes out hot, but it was hot.
It went.
How did it come in hot?
Yeah. I mean, definitely not what you were expecting to see. And one thing that I would say is, I mean, it wasn't too off the last report, 8.5, 8.3. We're going down at 0.2% rate. If we continue this, where would we be at the end of the year? We would still be in probably like 7.9 or maybe 7.8. And so to me, I mean, this is not enough to think that the Fed is going to change any pivot, right? And so another thing is a run into this number. It looked to me like buy the rumor, sell the news. Even worse, the news came in red and essentially hot for us. And so everyone that was buying the rumor just got caught.
Yeah, you had to sell it ahead of time. And I didn't think it was, I'll say it again, I did not think it was going to be hot. And I thought you might get I thought it was going to be light. I thought it could be significantly light. I thought we could actually get a bounce and maybe even get up to 420. A little bit greedy on my part. It was a really big move. Should have booked all the gains before the number. Obviously didn't do that. Mistake. Definite mistake. But, you might get another bounce here. You might get that little bounce, and that's going to be an opportunity to sell stocks. So now I'm on a full sell the rip and whatever the hell you can. So I'm going to leave you guys at that. I got to go trade, but I'm just selling the rip on whatever I can. So I don't think it's going to be much of a rip, though, because I think every other money manager is saying the same thing today.
Yep. And
Crowded,
I'll
long
let
trade caught. That is the world today.
you-
Yikes.
All right,
Gonna be a
Dennis,
fun
have
one.
a good one. Go
Yep.
do your work. All right, Dennis is going to go ahead and work those positions like always. We'll see what happens. I'm going to get you guys over to the Cannabis Conference. Yes, we have a Cannabis Conference today, the Cannabis Capital Conference, the #1 cannabis conference in the world. At least I would say so. But definitely come on over, guys. Come on over and learn. There's a lot to check on out today. You'll be having a little bit later in the day. We start off with unleashing investment and lending opportunities. We get into the state of the markets, legislative outlooks. We'll also look at how brands scale outside of the MSO. We'll also, at the end of the day, towards the 4 o'clock, I think there's some really good panelists at Tyson 2.0. Don't miss it. 4:40 p.m. Eastern today. We have Mike Tyson on, Ric Flair. You guys don't want to miss that. That'll be right here on Benzinga. Don't want you guys to miss that out. I'll get you guys over to the Cannabis Conference now. They're starting up already, so we'll get you guys over there. Like always, we'll try to do our best to cover. We'll be back tomorrow. We don't have any other market content today, but if you guys want to stick around with the markets, like always, you guys can follow me at Money Mitch BZ. I'll try to do my best to keep up with the market action today on my Twitter. And yes, Mike Tyson, Ric Flair are going to be on at 4:40. So don't miss that, guys. That's the Tyson 2.0 panel. And you don't want to miss out on my man, Mike Tyson, Ric Flair. And just for a good old fashioned, woo! I'll see you guys on over there. Get on over.